Hello and welcome to this Wednesday's morning market briefing. We've got lots to talk about, but firstly, OpenAI and Meta ready new AI models capable of reasoning. As well as that, European ports are turned into car parks as vehicle imports pile up. We've got lots to talk about on the charts. Also, with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it, though, make sure to subscribe. The first article to talk about is to do with OpenAI and Meta. Now, OpenAI and Meta are now on the brink of releasing new AI models which are able to reason and plan. This marks a significant step towards achieving superhuman cognition in machines. Now, of course, we talk about the kind of progress within the AI industry a lot, and that's kind of grown recently as, of course, we've started to see these companies grow in numbers. And we've started to see many of these different tech companies start to adopt their own versions of what kind of OpenAI has built. Now, of course, OpenAI does kind of have that backing from Microsoft, which is of course enabling it to kind of excel and progress further. But we know that the likes of Meta, even Google and others are already trying to kind of do the same and gain the same popularity with their own AI models, as has already OpenAI done with their ChatGPT 4 AI system. Now, obviously, we've also seen from Elon Musk, his own kind of project to do with X, formerly known as Twitter, where he kind of has now started his own AI chatbot as well on there, Grok, I believe it's called, and we've seen others obviously within the space of tech anyway. But all of these firms, what are they really trying to achieve? Well, it does seem to be that all these firms are really pushing for the key AI technology, which will almost replicate what humans are able to do with reasoning, their memory, and other sorts of things on that kind of train of thought, such as planning and that sort of thing. And that's kind of been the key thing which all of these models are trying to achieve and progress towards too. And of course, the most recent versions of ChatGPT 4 and Meta's version of that, I forgot the name exactly, but these newer models are of course trying to achieve that kind of thing. But what we're hearing here is that basically the next models to be released from both ChatGPT and Meta are ultimately going to fulfill that requirement and that ask from AI, which will be very interesting to see, of course, as once we do then start to see AI models which are able to completely replicate human output. Ultimately, numerous industries of the world are going to have to change very fast, and this is going to have a monumental impact on stocks and other markets and that kind of thing. Now, obviously, the way we've kind of usually been talking about AI is less so to do with talking about the industry, talking about the new technological developments, and more so talking about what the progression within AI is doing for markets and how that's affected US equities in particular. We know that the likes of Nvidia, for example, and other tech stocks have ultimately rallied to overwhelming levels as a result of these recent developments within AI technology. Not long ago, we spoke about Nvidia's new and kind of improved chip, GPU chip, which they're planning to roll out and start selling, which of course would offer greater computing power for these AI models. And we've also spoken about before that basically these AI models are going to require not only super powerful computers and machinery to run, such as we spoke about with Nvidia's latest chips, but also they're going to require a great deal of power. And whilst we might kind of often see something like AI as a very futuristic project, a very smart project, and we often relate, I think, smart to renewable and something that's better for the environment. But as we've spoken about from an article not too long ago, these fossil fuel execs have kind of pointed out the fact that, this new industry of AI is going to require a great deal of computing power, and as a result, a great deal of, power in general, a great deal of electricity. And where's that electricity going to come from? And it doesn't seem like, the current stage of renewable technologies are going to be actually able to power these machines, and therefore fossil fuel executives have basically said that this new development, these new improvements to the world in the sense of AI technology are ultimately still going to require a great deal of power, and therefore what is going to supply that power? Well, it's likely going to be the fossil fuels at the end of the day, and that's been a key kind of statement that's been made, and one that has been very interesting to kind of look at, and is quite I guess a pessimistic view on the future of AI and that kind of thing, depending on your outlook, but ultimately, of course, we've got lots to come for AI, and what we're hearing here is that these new larger language models may be released this year. So the progress is extraordinarily fast, and this is all coming at a time where certain people are saying there's an AI bubble forming. Could this exacerbate that? Of course, we'll have to wait and see. Now, Meta first said that it would be rolling out Llama 3 over the next coming weeks, and Microsoft-backed OpenAI said that they expect the so-called ChatGPT 5 to be released soon, with the Vice President of AI Research at Meta being reported to have said that Meta is hard at work now figuring out how to make the models not only talk, but also reason and plan, with OpenAI's CEO also telling the FT, the Financial Times, that the next generation of ChatGPT would show progress on solving hard problems, including reasoning. These upgrades come as part of a new wave of large language models, which are being released this year by the likes of Google, Anthropic, and Cohere. The pace of progress for tech companies to create an ever more sophisticated generative AI is accelerating massively, and AI models are now able to create text, videos, and code, which could all be considered indistinguishable from human output. This is all in an effort for these AI companies to create what is being called artificial general intelligence, which would be human level cognition. The key reason why this is a key goal being explored by these companies is because these companies are aiming to achieve this because AI systems, as said by Meta's chief AI scientist, struggle to deal with complex questions, or retain information for a long period, and therefore make stupid mistakes. So a very important article on a very important topic, and it'll be interesting to see how this rhetoric over the future of AI, these new language models that are now going to be released, is going to affect these key tech stocks which relate to AI so much over the next coming weeks as these new models are released. So definitely look out for all of that and keep your eyes on this topic, of course. That's all to talk about in this article, though. Next article to talk about is to do with European ports and the issues to do with EV vehicles. Now, imported vehicles are now piling up at European ports as a result of distribution issues. This comes as automakers and distributors struggle with a slowdown in both sales and logistical bottlenecks, with the lack of lorry drivers making this issue far, far worse. Now, of course, we've been covering the kind of topic of EVs and EV makers, and most specifically, of course, Chinese EV makers over recent months and that kind of thing, as this has been a very important topic of discussion. Not only on the front of the fact that automobile manufacturers around the world are basically struggling at the moment as a result of this kind of weakened demand for new vehicles that we've seen come as a result of higher interest rates and inflation. And so I think this has kind of been a very important topic that we've been staying on top of as a result. And we know that the likes of certain German manufacturing companies within Germany itself have thought about moving out of Germany, moving their manufacturing elsewhere and that kind of thing, all as a result of the kind of these higher prices and also higher interest rates. So most certainly over recent months, the car industry has been affected greatly, and China's been kind of this nation which has been affected extremely bad by the kind of issues with demand across the world, because ultimately China is kind of this industrial capital of the world at the moment, and is ultimately a great producer of all these kind of important things which the likes of Europe and North America kind of frequently buy and import. And so cars is another one of those things, and the development of EVs and that kind of thing has found its way into China and has built its base there, really. And ultimately, as a result, the drop in sales volume, all these car companies around the world have struggled, but especially China. And what we're seeing here is not necessarily the kind of effects and issues to do with the demand, but more so now issues to do with supply. We know that there's been issues to do with supply already with Chinese EVs and that kind of thing, just based on the grounds of what certain nations are allowed to import from China. We know that the US, for example, does have certain bans on where things can be produced in China and then imported into the US, and there were issues therefore to do with Volkswagen, which did have a car part that was produced in Xinjiang. And all these kind of different things have definitely shaped up to have certain problems pile up for Chinese car makers. But this article more so focuses on the issue of finding drivers, finding transportation, and finding those key networks that are required within your supply chain to get the car to the consumer or to the kind of dealership and that kind of thing. So certainly there are issues now piling up for China, also not only business wise, but now also on the European port side, as ultimately these cars are now stacking up, as you can see in this photo, like it's a car park, as they struggle to be kind of moved on to the next stage of the supply chain process, with port and car industry execs pointing to the pile-up of Chinese electric cars as one of the leading causes of this problem. This is largely because some companies are booking shipping delivery slots without ordering onward transportation, and this is happening because there is a lack of drivers. And the very fact that Chinese car makers are not selling their vehicles in Europe as fast as they expected means that cars are piling up in European ports, with the FT reporting that one supply chain manager said that Chinese EV makers are using ports like car parks. Some Chinese EVs, for example, have been sitting in European ports for up to 18 months. This entire issue emphasizes that brands must improve their after-sales services. So, very important article here, and a very interesting one in relation to the automobile industry, and especially to do with China and their relation to Europe with their car exports. So, very, very interesting article. Something that's definitely important to keep your eyes on. That's all to talk about in the articles, though. Next to talk about, of course, is the charts, where we do have quite a bit happening as a result of the fact that we do have lots which is taking place not only today but for the rest of the week, especially within the US stock market. And that is why, of course, once again, we are beginning with the US indices as a topic to talk about. More specifically, of course, we're talking about the Dow Jones, the US 30, which is in a very interesting position at the moment, where price is ultimately ranging around. Now, of course, just to summarize really what we've been talking about recently, price on the US 30 did sell off beginning the month of April as a result of a change in rhetoric from Jerome Powell, and some recent data which has ultimately came out, which has proven and kind of created these thoughts for most investors and traders that basically inflation is going to be persistent within the US economy, and so the US is going to have a great deal of issues therefore with actually bringing down this inflation figure. And of course, then the Fed is looking like they're going to have to hold interest rates higher for longer, which of course means that these key US companies, these key stocks, are not going to be able to, of course, get the interest rate that they need to properly expand and that kind of thing. So that's kind of the issue which has been facing US equities, and that is why we've then seen this sell-off take place, as Jerome Powell's rhetoric has then kind of reiterated that fact. That said, price really bottomed out near this kind of key liquidity level, and which was last seen tapped in the start of March, and since then price has kind of been ranging around that area. We did say that should price kind of come up and come into contact with this 50% Fibonacci retracement level at the start of the week, we would be expecting price to sell off, and it does seem like price did do that yesterday. However, whilst price did sell off, price then did of course return back to the upside after making this kind of double bottom, and therefore now it does seem like price is kind of in this ranging period, this ranging motion, where price is kind of struggling to find a direction either to the upside or downside. And this is largely to be expected. After all, we're getting a great deal of US economic data this week, which will be definitely impacting the US 30 in particular. So that's something that's definitely important to keep on your mind, and I think it's something that's important to note in regards to why we're seeing this kind of price action. But nonetheless, keep your eyes on the US 30, the Dow Jones, as we are getting lots of economic data this week which will be affecting it. Next to talk about though is of course the dollar, which not much can be said at the moment as a result of the a great deal of economic data coming up not only today but for the rest of the week for the US. The dollar has ultimately just been moving quite flat. It hasn't been moving to the upside nor downside, and really it's just kind of been hovering in between these key liquidity zones. So price hasn't found its kind of way yet, and ultimately therefore it's kind of been hard to make a gauge of where price is set to go next. Obviously price, like US equity, surprisingly did sell off from this very key liquidity zone, which we'd noted as a significant area of resistance. So price did sell off from there, and price is now around this range area. But ultimately, once again, price hasn't found its direction just yet. But today's US inflation rate figure, as well as numerous Fed official speeches and FOMC minutes, is definitely going to be affecting the dollar. So we should be expecting a great deal of volatility today. And the key areas to look out for, of course, are these kind of liquidity zones, which price may look for liquidity before moving one way or the other. So definitely keep your eyes on those levels. Next to talk about is still on the topic of the dollar, but more so on the topic of the euro USD, which has also been moving a bit flat recently, but ultimately is now just sitting above this area of liquidity, or on this area of liquidity, you could say. Not yet. It doesn't seem like price has just yet decided whether it's going to now swing to the upside, and that is obviously because we are getting this kind of a great deal of economic data this week and today, which is of course going to influence where price does go. So that does explain why the euro hasn't made this move just yet, either to the upside or downside, and we could definitely be looking out for a significant move taking place today on the euro. An interesting kind of technical point to make though is of course the fact that we are seeing this bearish divergence form on euro USD. Pardon me, why has that happened? So I think that's something that's also very important to note, and it does seem like this kind of move yesterday, where price did peak above this recent high just in the lead up to the economic data that we're getting today, was kind of a liquidity trap, an effort to take out these stop losses in line for the economic data that we are getting today, as these key financial institutions do hedge their bets in line for what does come out from the US inflation figure. So certain interesting things are taking place on euro USD, and it's very important to keep your eyes on that pair most certainly. Next to talk about though is pound yen. Not much to say on pound yen. Price did push to the upside to start off the week, yet yesterday we did see price then sell off to the downside and kind of come into contact with this recent prior high, but on the other kind of side of it, of course. But yeah, definitely keep your eyes on pound yen nonetheless. Next to talk about though is Bitcoin. Bitcoin's been highly volatile recently, but interestingly yesterday price did then sell off after on Monday price pushed above this key liquidity zone, and we were talking about price possibly now making its way all the way to the upside and breaking above these prior highs. That said, price did break above those highs, but then just did sell off and has now moved to the downside and come into contact with this liquidity zone once again, which lines up with this key Fibonacci retracement level. So price has made its way to the downside now. The question will be whether today, now that price has come into contact with this Fibonacci level and liquidity zone, whether price will now swing off to the upside once again. Next to talk about though is gold. which is just continuing to move to the upside. So definitely keep your eyes on gold, as price does not look like it's stopping anytime soon. And lastly, to talk about in the charts is of course oil, which has now peaked once again below the $90 a barrel level after coming into contact with this liquidity zone once again and selling off from there. Lastly, to talk about though, of course, after we've covered the charts, is of course the economic calendar, where we're getting a great deal of very important data today. So lots to listen out for. But firstly, we will be getting the Japanese producer price inflation figure, followed by the Bank of Japan's governor's speech, and then followed by that in Europe we're getting the Italian retail sales figure, and quickly to follow that we're getting the US mortgage applications figures, as well as the US inflation rate figure. And that's the key one to listen out for today, guys, is that US inflation figure. That will be affecting markets greatly. Followed by that, we're getting numerous Fed officials speaking today, as well as the Bank of Canada's interest rate decision and their press conference, which will also be affecting the dollar, of course. And then, of course, the US wholesale inventories figure. And finally, to end off the night, we'll be getting the FOMC minutes. So lots happening, but lots will be affecting the dollar, especially economic data wise. But we've covered lots on the economic calendar there. We've covered lots on the articles, lots on the charts, and lots on the economic calendar. That's all from us at Wildwood Capital, though. Have a great one. See you later. Bye.